All right, folks, good morning. Happy Tuesday, 7:50 a.m., March 17th, and price of Bitcoin currently at 5302. So not a whole lot of movement over the night. I mean, pretty much just, moving sideways, it seems. This whole chop right here, I'll explain it in a little bit, but I do want to let you guys know, for those of you who are sitting in trades with us in the advantage side, remember that we took on a really fantastic trade at, what was it, $5,700 or so, right? So where was it? 5750 right there, this movement down, okay? And so that movement down was this particular area right here, okay? Because for the most part, I knew that this whole thing looked like garbage. And on the move down, we got a nice entry on a short. And we pretty much rode this down, didn't really take profit down here, but we took some profit, I think, over here, and then we pretty much got cut just yesterday evening when this thing kind of blasted up, okay? So number one, there's a couple of reasons why I wanted to explain to you guys why I moved my stop at, what was it, 5140, okay? And how to recognize and understand exactly where it is in situations like this, excuse me, in situations like this, where you recognize that market could be moving the other way, and maybe you need to tighten up your stop, right? So let's get to it, okay? So remember that one thing that I like to do in the markets is that, let's do this. Let me pull up a fresh chart, okay? So let me see here if this is any bit useful. Okay, so in this particular case, I told you guys that one of the larger, or is it parallel channel? One of the larger areas that we were watching in terms of a parallel channel was this right here. Okay, so if we mark out a bottom right there and a top right there, right around that area. Okay, so we got a touch right there and a breakthrough right there, but basically a fake out, and then sells back under, and then find a support right there. Okay, so the first positive sign when you start looking at a trading range like this is that we created a bottom and a top. Okay, we took out the high of the top of the range, and then we bounce off the EQ, which is basically like the 50% range, if you will, right? The 50% fib. So bouncing out the 50% fib tells me that if prices start to climb back up, now it doesn't mean that we just kind of go like this and then go like this and then start coming back to it again. Usually it has to be a nice quick spike like we saw right here, okay? And so that tells me that if you bounce off the EQ right here, which is that white dashed line, which is a 50% of this range, that means that you may potentially test towards this high. Now, I had no idea when I was holding my short, this whole thing had happened, right? Because all I knew was over here at this particular point, it could very well go like this right here and then come back around, okay? And the reason I started tightening up my stops from up here down to 5250 and then, lowered it once this double top happened down to 5140 is because when I saw this movement happening, and you see a mini, sort of double top right there, like on a 30-minute time frame, your double top should start accelerating price down, okay? It shouldn't go something like this, right? So remember, this was your double top right there. It shouldn't go something like this and then start creating higher lows like this and then start moving back up towards these two tops right here, okay? Now, again, going back to understanding as price is moving to gauge these things is particularly important because remember, price is happening in real time and sometimes very fast and very aggressively. So knowing when to understand and read price action is something that I try to do as best I can to explain, why I'm tightening up my stops. So this particular case, it's very easy to recognize that after this double top was broken, remember, double tops are validated once the first low between them gets broken, right? So once that got broken to the downside, what you want to see is continual movement down like that, not low, higher low, higher low like that, right? So right around this particular area is when I move my stop down. I think my stop was like somewhere up here to tightening up, you know, just like right around this area right here, okay, 5140 or so. And then that got blasted through with this particular candle right here, okay, on a 1 hour time frame, okay? And so now where do we sit, right? We're sitting above this double top resistance. We're sitting right in the heart of this range right here, which was a majority of the price action. Now, I bet you if I draw, if I put a fixed range, there's going to be the POC red line right through this area in the high volume node, okay? So let's check that out, right? Favorite indicators, fixed range. Okay, draw from there to that area. Okay, see, I told you, right? High volume node, POC, right there. Perfectly right there, okay? So it just goes to show that, you know, when you start to recognize where a majority of the price action takes place, this kind of fixed range indicator right here, you don't even need to pull up. You can kind of just visually see it. And just like how I just visually told you before I even saw the fixed range, right? This high volume node right here, which is this, if you guys can see that closely, the black line and the white lines that are poking out, like the histograms, and this red line right here, this is essentially telling you that a majority of the volume took place right around this area right here, which is around 5250 or so, okay? And now, what we've really done is we've, you know, circled up and down around this POC, around this high volume node, and now we're selling off some more, okay? But what we recognize, all right, let me delete that, even on the smaller time frames, is a pattern that you guys are familiar with, right? You have a left shoulder, a head, and a right shoulder developing, okay? Now remember, again, for this to be validated, it must break the neckline, right? And it should actually start accelerating down, okay? Just like how the double top can't just be like this and like this, and then it comes back up again, okay? All right, so that's one pattern we're looking at right now, okay? The head and shoulders pattern. I personally think that we need to be a little bit more careful going into the day today, because if you look at pre-markets right now, futures, all of them are up, okay? But again, you know, we've seen markets open somewhat positive at the beginning of the day, and then by the end of the day, they look like this, right? And as you guys very well know, the S&P 500 and Bitcoin have been moving pretty synonymously. So I'm not too gravely concerned about, you know, them moving in opposite directions or Bitcoin starting to take off or anything like that. I still think it's important to maintain the bearish bias, in my opinion, okay? Because if you start looking at, say, the daily time frame, I think it's abundantly clear that we've made a strong bearish case to the downside right now. And I don't think that's changed just because we've made a move of a couple $100 up. I think we have significant levels in the way that we need to break. Number one, all right, if we start looking at this in terms of levels, let me turn off the volume right here, okay? And we could even turn on the pivots, right? Remember, pivots are nothing but SR levels drawn out in an easier manner for you, okay? So first things first, I don't know if you guys can see that the pivot is right there. It looks really ugly. But there you go. The pivot is right there, currently around 57.20. This is on a 30-minute time frame, right? If we go on a 15-minute, we're actually above the pivot right now. But we smashed into the R1, and now it looks like we're kind of selling off, right? So the next level, if you want to stay short, okay, you could place your stop above this R1. If you want a tighter stop, you could place it above this wick high right here, around 53.80. But the levels you want to look out for below are 49.30, and then 45, or I guess it's $4,500 flat. So those are the levels that you want to look out for, okay, for more downside, all right? Now, in my personal levels, okay, now let me turn off my pivots and turn this on. Okay, okay, so if we look at the personal levels of mine, 5,600 is the key level. Why? Because this right here was the consolidation before the sell-off. Now remember, if this was a previous support, as you very well know, previous supports often act as resistance levels, right? So this was already resistance once. This is already resistance twice. Now, if we come back up to it again, I'm going to say that I would feel a little bit more positive that we're going to break this to the upside, okay? Now you're probably wondering, okay, shit, well, if we break that to the upside, well, what level should I look out for? First level we want to look out for is 58.73 right there, okay? That was this wick high that held down this price from, pushing any bit further, okay? So I would expect if prices move from here, challenge this $5,600 area, we should push at 58.73 or so, at the very least, okay? If we challenge 58.73 and break through it, then we should get to almost $6,200, which was the range high up here, okay? However, like I said earlier, there's really no follow through in price right now. So far, it looks like it's creating a head and shoulders pattern. I guess, what you could do is maybe look for a similar movement like this, where price pulled back, gave you a higher low, and then starts pushing back up. So maybe, in this particular case, you could look for a pull down maybe into this area right here, which is around 5,000 down to about $4,800. So that $200 range, if we do break down, you could take particularly, some small long positions. After we closed our short yesterday, luckily we got into a scalp position. That was really nice. We got in around 51.50 right there, as you can see. So again, really quick movements in the markets, and sometimes I try to catch them. I really don't like scalps like this, especially in fast-moving markets. And I especially don't like taking long positions when the overall market structure is already showing me that we've been, aggressively selling off, right? So it's much easier for me to take short positions on bounces versus digging, on smaller time frames for potential longs. Because if you look on the long positions, they're very fast and accelerated movements. You'll have like a consolidation, and then you'll have a quick pop like this in less than like 20-30 minutes. Versus if you start looking at the short positioning, it's very easy, right? You have a long period of consolidation, at least, on a 4-hour daily basis, and then you start selling off. Like over here, we consolidated for like 3 days, and then we sold off. This was like 8 hours, then we sold off. This could be another 2, 3, 4 day consolidation right here that we're seeing, and then we might sell off some more. It's very possible, okay? Because remember, nothing in the markets have changed, right? As I've pointed out many times before, the S&P 500 is coming to a key pivotal area. Actually, let me go back to that. If we start looking on the 15-minute time frame on the S&P 500, we took out the key low from yesterday. Okay, this was a low of yesterday's candle, and we just had an aggressive sell-off. Like the sellers came in, did not fuck around. Basically, they torched the price right in the last 15 minutes of the day. Okay, and so the point is that we've done something very technically sound in the S&P 500, which is this consolidation right here, right? Gap down, chop, 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 touch it as resistance right there, and then sell off some more, okay? Gap down again, you have a bunch of chop over here. Again, test this support right here as resistance right there, and then following day, we sell off some more. Okay, so this has been sort of a repeating pattern of the S&P 500. Again, just yesterday, moved up, moved up, moved up, cover the gap right here between that low and the candles opening down here, covered that gap, sold off some more. Okay, so it's kind of become abundantly clear that all we're really doing is smashing into previous support as resistance and selling off, right? It's a very simple rule of technicals, And so as we see pre-market open, I expect maybe a little pop here and there from the foots in the S&P 500, and then potentially more selling. Now, if we're starting to look at selling, we're coming to a very, I guess, key area, which was 2018 support right here, way back here from the S&P 500, 24th December. We created a bottom right around 2350. Okay, so we're very close to that, right? Very close, right around, maybe 50 points or so. Okay, so we could easily tap this area, this green box, as support by today or the end of this week, and then pop back up. And like I've said before, if Dow theory is to be playing out in this particular cycle, this is usually your first big leg down. Dow theory states it's a pretty violent move. And then you have a ranging and a consolidation and a distribution range right here, basically. And then you have your third phase down, which is, your final capitulation stage. Okay. Now I've heard the arguments, I even spoke to one of my friends who's on Wall Street and my father-in-law, and they said that, personally, they think this is a black swan event and this is like any other, overreaction to the market. And we could just, V-style recover from here. Oops, that was a crazy arrow. We could just V-style recover from here. I'm not really of that opinion yet. It's very possible we could do that. Again, I have no idea what markets are going to do at the end of the day. I look at, the surrounding fundamentals. I look at how the market has reacted so far. I look at the world events. We can look at, all the news around us, the factors around us that are reshaping our lives and the economy, and we can make a decision based off that. And my decision based off that is that I don't think this is enough to factor in what coronavirus has done and is going to keep doing for the next several weeks or months ahead. And that will factor in potentially more losses for GDP, and also exacerbate more internal problems that we already had regarding debt and liquidity crises, right? So the point is, I personally find it really hard to believe that from here we could just V-style recover. But again, that's just my opinion. We'll see how the market goes over the next several days, several weeks. One day at a time is how I like to look at the market. And for now, like I said, I think it's best to stay short biased until we're kind of shown by the market that, hey, it's now painful to be short biased. But until then, I think we can still maintain our short bias, right? And also based on this trading range right here I told you guys about. Let me see if I can go to the 3-day chart. All right. This makes it a little bit easier to look at. So remember that, this was a large trading range between this high and this low in 2018. And for the most part, we spent a majority of the time in this particular trading range right here. This is right here, just a deviation of this range right here. This is also a deviation. And now what we're seeing is potentially another deviation, or we're seeing potentially a rejection at the bottom of this range right here, which would imply that we may have potentially more downside before we pop back up. Okay, if at all we pop back up. Again, I'm not trying to say that Bitcoin is doomed and we're screwed. I'm just saying that as per technicals, it's very hard to ignore that we're in a peculiar spot. Okay, and unless Bitcoin corrects itself, the S&P 500 corrects itself soon, it is very hard to look at this market as anything but bearish. Okay, I'm sure people are telling you out there, this is the time to buy, but I would rather wait until the market shows us maybe another potential breakdown and a higher low, or a break inside this range, and then I would like to buy back in. Until then, I think it's a very scary time, in my opinion, to be, have a bull bias or be long. Okay, those are my thoughts. All right, I'm going to open up the floor to any questions. Any questions from the Advantage members? All right, Tyrone has a question. Let's see here. Oh, and by the way, before we get to that question, you can notice, some of the stock markets still are seeing some bleeding across the board, trying to recover, nothing special yet, but it's not as bloody of a day as we saw yesterday. Monday was the bloody Monday, clearly, right? So If you draw the bottom trend line joining the 3K bottom, what do you think of that trend line? I think we were getting rejected there as well. 3K bottom. Let me see. So like this, maybe? Kind of like that? Is that what you mean? Yeah, that's a great point, Tyrone. I haven't really left that on my charts because so far, I think the most important trend line to me, and obviously this is a very important one that Tyrone pointed out, but the most important trend line to me was, in my opinion, this key higher low and this higher low that we got, where was it, 18th, 19th December 2019, right? That was particularly important to me because we did actually bounce successfully off it right here, but then smashed right through, on that big red bearish candle, okay? And, obviously I had some other ones too, but I've deleted those since. But I left this one right here. But, I do agree with Tyrone that the trend line that I just showed y'all is also particularly important, which is this one right here. And it's actually a very perfect rejection of price action from this low in 2018 of 3,100 to this higher low around 3,400. And those two just happen to meet perfectly at $5,800 or so, which is the bottom of this range, okay? So, with that being said, like I said, it's very, important when you start looking at price action, you start drawing trend lines, you start looking at trading ranges and parallel channels, start looking at things in ranges and channels, okay? It'll help you understand how price travels and traverses through particular resistance levels and support levels, okay? It just makes it very easy to, look at price like kind of moving in momentum, if you will, okay? All right, Siphon asks, what do you think about the potential falling wedge on the 4-hour with bullish divergence? Okay, so let's take a look at that. All right, falling wedge. Okay, so maybe he's talking about something like this, maybe something like that, I guess. Falling wedge. I don't know how to draw a falling wedge here, actually. This is like more so a channel, I would say, if you're going to look at price this way. All right. I don't know. I don't really see a falling wedge here. If you're trying to encompass all the price action, I don't see a falling wedge. On several exchanges, it's a wedge. Okay. Okay, well, we'll take a look at other exchanges. Let's see. I kind of want to see. Let's see Coinbase. So, by the way, folks, Coinbase is my go-to exchange when BitMEX is messing up, just because, it's the most reliable spot exchange, right? Okay, so I guess it's kind of like this. All right, so now I see it like that. And then if we're starting to touch this low and this low, okay. I still don't really see a falling wedge. I mean, I see a maybe like slight tightening, but more so it's like a channel. I don't know, Siphon. I'm not really seeing a falling wedge. I am recording this, by the way. Let me see here. Look at Kraken. I hate Kraken. I'll be honest. I'm not even going to look at Kraken because it's bullshit. There's just, lack of liquidity there. They just have like too many discrepancies in price action. I don't know. I really don't like to look at Kraken, but I'll take a look at it. Let me see here. I don't know. Okay. If I'm drawing it like that, even like that. You see, even here, I mean, the angle is just, just close enough to be more so a channel, I mean, you can see touch at the top, bottom, just ignore this wick because it's garbage. And now we're breaking outside of that. You could say we're breaking outside the parallel channel, but I don't see a falling wedge. But I'll look at your chart later. What's up, Snay? Kraken acquires Circle's OTC desk, and so the price action is really impacted by mega whales with no trading limit. Yeah, I would figure so. And also like for their own retail customers, they've clearly shown me that they really don't have the liquidity to take care of their own customers because they have wild wicks all the time. And even customers and clients of ours on Cryptosomniac have complained about Kraken. So, with their liquidity issues and having their orders being lifted or, not being filled properly. So I just don't really trust that exchange that much. Yeah, Crypto G, head and shoulders on the 15. I talked about that at the beginning of this video. So, okay, so let's look at game plan, folks, right? So you guys are wondering, what the hell do we do with this information, right? All right, so here we are, right? We're creating a head and shoulders, okay? No validation of the breakdown of the head and shoulders, but if you want to be a little bit more aggressive, okay, you could go short right here, okay? You can anticipate that the head and shoulders will break out, but again, I don't particularly see that as a good way to go about it. You could say that, I'm going to go short right now at 52.40 or so. I'll place my stop just above this right shoulder right there, right around $5,400, or as high as up here around 54.75. Okay, so that's one of the things that you can do if you want to utilize this head and shoulders. Okay, alternatively, you can say that, this trend line right here, okay, we were creating sort of a trend line right here, that pretty much broke, okay? For all I know, we might use this trend line as resistance, like somewhere up here, and then start selling off. Usually trend lines, I like to see them being rejected, not too far above the high. Usually I want to see trend lines being rejected, like say this area. If it breaks down, it hits right here, and then it starts selling off. But if it's way up here, chances are it's gonna go higher, okay, in terms of just trend line rejections. Now, if we start looking at price action, okay, like I said, I personally think that if price moves back up, I can easily see it get to 5,600. And if it gets to 5,600, there's probably a higher chance that it gets all the way to 58.75. Okay, so the only thing I have holding right now in my position is a small long scalp that I put out to Advantage members just last night, as you can see. And I'll probably take profit and let the thing run, maybe all the way up to the technicals that I just spoke about, 5,600. I'll probably move my stop up, and then maybe 58.75. Okay, I would say that particular area is going to be quite strong for Bitcoin to get through. And I would say up here in 5,800, 6,000 area, I'd say there's going to be a lot of FOMO. And I want to capitalize on that FOMO by going short up here. This is where I would be looking for an ideal short, okay? Let's turn on the VPSV and start looking at if there's anything up here. So here's the, by the way, remember, VPSV is the, session volume, right? So just like how I showed you the fixed range volume for this particular range earlier, what this is showing you is in each day, in each daily candle, in these individual movements, where was the high volume node, where was the POC, which is this red line. And this highest red line right here is around 6,050. And that's where the high volume node is as well. So it's very possible that price gets all the way up to that area and then starts rejecting, just like how this one basically whipped into this area right here and then sold off. Okay, so it's very possible that we get to that area and then start selling off again, because there's not a whole lot of price action that's taking place up here in terms of rejections, right? We only came very close to that area and then rejected. So I'd say that we get maybe a little bit higher into the 6,050 area at the very most, and then start seeing rejections. That would be my ideal short, okay? I would say probably on a daily basis, like I showed y'all earlier, right? If we go on a daily basis, if I start seeing prices come back towards this area right here, $5,800 or so, I would also say that that's particularly a good place to short, 58.73 right there. So, that's kind of what I have my eyes on in terms of shorting. I really don't see shorting here to be, it's really not low risk, let's put it that way. And there's really no confirmation of a breakdown either, just yet, okay? In fact, one could make the argument that we actually created a low right there and another low and another higher low, right? So higher low, Okay. So, we could make the argument that we might actually pop up a little bit more to these levels and then potentially sell off. Okay. But I'll keep you guys updated through the day exactly how I'm going to position myself, Um, but yeah, I think that's pretty much it. We'll wait for the stock market to open. It's about to open in 10 minutes. For those of you who are, in the advantage side, obviously keep reading these equities updates, folks. They're very important for you to understand exactly what's going on in the market. How to deal with, the external factors that could impact Bitcoin. And you'll also get an understanding of how the U.S. economy is looking at this, how oil is being impacted right here. He talks about oil a little bit. And so, even if we start looking at oil, right, there's just so much struggle in oil right now. This is just crazy. I mean, I've never seen times like this. Oil is under $30, which is already a key level, and it's now at 28.55. I mean, this is just not good. Like everything is, kind of in a large shitstorm, just playing itself out. And I think Bitcoin is just caught in the middle of it. So I find it very tough to make the bullish cases right now for the long term. Like I said, if I'm looking for longs, I'm looking to, have it be scalps or get in and out quickly. It's just really hard to find, um, long scenarios and long bias cases. All right. But that's it, folks. I hope you guys enjoy the content. I don't see any questions, but Rex, I think we covered your trigger points, correct? All right. So yeah, I think that's pretty much it. I'll keep you guys updated through the day. As you very well know, I keep y'all updated in the Bitcoin analysis channel. And look at all the updates, folks. Whenever I write an update, please read them because I put a lot of thought, time, and effort into them, especially, even if I make these videos. This is what you guys pay for, right? All these updates, all the trade setups that I put out, even the equities analysis that we put out. And then on top of that, now we're opening up, oil, Forex, and options for Advantage members. So tons of great content coming your way over the next several months. And I'm really pumped to help you guys grow, as traders and investors, and also people who understand markets from a more macro perspective, okay? So y'all take care, and I'll keep you guys updated. All right. Cheers.